Hey folks, this is Eric Chapelle, the South Jersey real estate guy working with Weichert Realtors in Cherry Hill. And today I'm sitting at an open house. We're getting ready to have people come in and take a look at a property that we're at. And I got a question for you. Do you know what a non-warrantable HOA is? Well, now that you had a couple minutes to think about it, a non-warrantable HOA is an HOA that does not meet the eligibility requirements for an FHA or a VA loan or any government-backed loan. That could be due to several reasons, and that's what we want to talk about today. So please stay tuned. You'll learn more about it. The reason why an HOA could be non-warrantable or not meet the eligibility requirements for an FHA or a VA loan or a government-backed loan, there's about 6 different reasons why. One is because there are too many investors as opposed to owners in the HOA. And that can make a problem because if your investor level is high and your owner level is low, you're going to have more renters, fewer owners. And you say, well, why does that matter? Because there's a couple of things that come into play. An HOA wants people who are responsible for the property to live there. And the more investors you have, the more renters you have, the less people tend to take care of their property. Or it could be, number 2, one investor owns too many homes. You say, well, there's not very many investors in this HOA. There's a good balance. But if one investor owns multiple properties, that will also throw the eligibility requirements out of whack. So you got to make sure that this investor doesn't own too many units. That could be another reason why it is considered non-warrantable. There could be too many owners who are behind on their HOA fees. They're not paying the fees. They're not keeping up to date on it. The HOA is owed money, and because of that, things are falling apart. Things aren't being cared for. The FHA, VA, those loans, they come in, they inspect, and they say, nah. It's not going to match up to our requirements. And so they take a pass on that condo association and make it, what's the word? Non-warrantable. That is correct. Also, it could be pending litigation. There could be lawsuits against the HOA. Maybe a tenant or an owner has a problem with the HOA that they have not taken care of some things that they said they would in their guidelines. And so because of that, they're suing the HOA. And because they don't know how much money this lawsuit could generate for that owner or tenant, the government will say, I'm sorry, we're not going to back this. You aren't eligible for any FHA or VA loans. So that's another reason why a place could be considered non-warrantable. You getting tired of hearing that? I'm getting kind of tired of saying it. But anyway, that's another reason. So, insufficient insurance coverage. If an HOA fails to provide enough insurance to protect loss on that property, they will become ineligible in the guidelines of the government. Now, it's important to know that there are some HOAs who have fallen short, and so they have special assessments because they've had too many losses, and so the insurance premiums have gone up, so they have to have a special assessment to help get them caught back up to bring things back to balance. And those assessments could last for a year, they could last for 2 or 3 years, whatever the case may be, until they balance their books out because of loss and loss mitigation. So they could be doing a new construction project that's not fully sold out yet. Because there's empty properties or buildings that are still being built, FHA, VA is like they don't want unbuilt properties on their established HOA. They don't know when that's going to be finished. They don't know if it's ever going to be finished. And it could be an eyesore. It could be a problem and lower property value. And if the government's giving you the money to help you get your property, they want to make sure that it's warrantable. That is something that they'll be able to recoup their money if they had to sell the property. So because an HOA is unwarrantable, that doesn't mean that all 6 of these things are true. It can be any one of those 6 things that makes a HOA unwarrantable and ineligible for FHA or VA financing. You say, well, what difference does that make to me? I could care less. Well, it could mean that it's harder to get a mortgage. You'd either have to go conventional or pay cash for the property that you want. And there's nothing wrong with that. It's just that the guidelines sometimes will go up and be a little tougher for a bank to give you that conventional loan. And so that's why being a non-warrantable HOA is a problem for some people. Another reason why it could be a problem, it means that there could be a higher cost to your loans. They could charge you a little bit more and interest rates. They may ask for more money down up front to help, again, cushion that space, that inequity that you might have if you are in a non-warrantable condominium or an association. Another reason why it could be a problem for you is that it might be tougher for you to sell your property. So you may be thinking, I'm going to live here forever, but most people live in their homes, their first homes, or any home for that matter, about 5 to 7 years, and then they're looking for a new property. And when that happens, if you're in a non-warrantable HOA, it can make it more difficult for you to be able to sell your property. So with these things in mind, when you see the words non-warrantable HOA, it doesn't mean, oh no, the sky's falling, everything's terrible. It doesn't mean that. It just means that there are certain things that have happened or certain things that are true that make it ineligible for FHA and VA financing. So with those things in mind, please make a good decision. I bought townhouses that are non-warrantable, no problem. I've been able to sell them. They built equity, but I did have to go through a little tougher as far as getting the loan up front. And so these things are true. So please keep those things in mind as you're getting ready to buy into an HOA. Hey, it's been a pleasure talking to you today. This has been Eric Chapelle, the South Jersey real estate guy. Trust that you learned something today that'll help you move forward in your home buying journey. And we'll look forward to talking to you again. See you real soon.